This is Daniela Camboni for Kitco News, and we are coming out of the U.S. long weekend with trading in the precious metals markets remaining cautious amid the European Union sovereign debt crisis. Top stories coming out of there this week is Bankia, the large bank in Spain, having been given significant bailout money. Second top story we should be paying attention to is that some polls in Greece are now showing that the Conservative Party is ahead of the Liberal Party. It is believed that the Conservative Party is more likely to support austerity measures in Greece. Joining me to talk about all this and more is Peter Hugg. For Pete's Sake is coming up right now. All right, joining me now is Peter Hugg, Director of Precious Metals Division for Kitco Metals. Peter, always a pleasure.
Thank you. Nice to see you again.
So I was just speaking about Europe, the story that just won't go away in my intro earlier. Peter, can you help us put some sort of framework around what's happening there right now and the impact it's having on gold?
Well, initially, at the beginning of the week, yesterday and Friday, there was some recapitalization of Spanish banks and some rumors that the Greek coalition party was going to back austerity, and that boosted the euro short term and caused some movement into the precious metals.
All right. On the U.S. front, however, we did see consumer confidence sinking for a third straight month today. Do you think that might have any impact?
Well, I think generally consumers are scared, and I don't think the situation in Europe is going to go away anytime soon. I mean, we had a little bit of a run-up this morning at the opening, and silver's now dropped almost $1. Gold is down about $25 from its high. So I think the issues in Europe are going to stay with us for at least the next couple of months and probably continue to put pressure on the metals.
Right. U.S. jobs figures also coming out this week. Is that something you're going to be paying attention to?
I don't really look at them that closely. I do think the U.S. economy is bottomed. What concerns me in the U.S. is the political setup. Hopefully, after the election, they'll get their act together and they'll do something with some foundation that'll get the U.S. economy moving. But I do believe the U.S. economy is much stronger currently than what we're seeing in Europe.
All right, staying on the topic of Europe, Peter, I've had a few viewers emailing me that the cash market for silver seems to be at a premium in London to New York. Mm-hmm. Silver backwardation in the silver market is something that we've seen since December. Mm-hmm. What do you make of it?
Well, normally when you see backwardation in a true sense of the word, where the cash market is trading at a premium to the futures market, that indicates large physical demand for the metals. In this case, having spoken to London this morning, the differential in the price between London and New York is really as a result that most trading houses trade London, and it's been a result of the selling of precious metals. They sell to the dealers liquidate their positions in London, and they cover them on the COMEX futures exchange. So as their London positions go down, their New York positions come up. It costs about 4 cents to ship silver from New York to London, and that's the differential in price.
Right. I spoke to a few sources this morning who said that it's really not a question of a shortage of inventory. There's no shortage of silver, especially in the U.S. and Canadian market. Is that what you're also hearing?
Absolutely, and I don't think there's a shortage of silver in London. This is basically a book-based system, and to replenish the stockpiles in London from New York costs 4 cents, and that's why you're seeing the premium.
Right. I also spoke to Adrian Ash. He's based over in London, and he was telling me that if we are seeing backwardation in the silver market, it has less to do with demand for the metal, but he's placing the culprit on zero interest rates. What do you think of that? I'm
not convinced that zero interest rates play a major factor in this current backwardation. I do think in normal backwardation, the lower the interest rates, generally the higher the backwardation and the premium from spot to future. But in this case, I just think it's people that got offside on their trading book and they need to replenish London and they're bidding it up.
Okay. So why should we pay attention to what's happening right now in the silver market, Peter, and how do you play it out?
Well, I like silver. I'm waiting for one more washout. I'm hoping that the euro will at least test 120, maybe even breach 120, get down to 115. Which I think will take gold into the 1400s, and hopefully silver will have a consolidation phase with one final washout and looking to pick it up between 24 and 26, because I do think the metals will go higher down the road.
All right, fantastic. Peter, final thoughts for investors this week?
I think you don't panic. If you're holding precious metals for a core position, don't worry. If the markets go lower, just use your 10% rule and buy more metal to keep your 10% ratio in line. And if you're a trader, plenty of opportunity to make money. You could have gone long this market in the morning and then shorted it at around 11 o'clock and you'd be laughing. So plenty of opportunity to make money.
So don't panic.
Don't panic.
Okay. Thanks so much. And from what I understand, I'll be seeing you in Las Vegas next week for the IPMI conference.
That's correct. And hopefully we can do the next segment from a golf course.
Absolutely. Sounds good. And thank you for watching this edition of For Pete's Sake. You can email us at newsfeedback@kitco.com.